We're going to start with a big deal, not only for the day or the week, possibly the year. It's in the energy sector. NextEra Energy buying Dominion Energy. This is a roughly $67 billion deal in stock, the equivalent around $76 a share to Dominion shareholders based on Friday's closing price. In addition, they will receive a one-time cash payment of $360 million once this deal closes, which they expect to have happen in about a year and a half. So this deal is going to combine two of the largest U.S. utilities into an East Coast titan, territories in Florida, the Carolinas, Virginia. So this is going to require state and federal regulators to sign off on it, though. But the stock is up big time. Dominion up 15% here on this news today. It was already up 5% year to date.
70. What's the price? 74?
76 a share.
I'm interpolating this. Don't hold me to this, folks. But Paul, you know, Dominion is what every grandmother owned, right?
Yes. Yep.
I mean, it's all there is to it.
Yep.
You ready?
Yep.
3.3% per year for the last 10 years.
Yeah. But you got a dividend. But you got a dividend, I'm sure.
Yeah, that includes the dividend, wise guy.
Oh, okay.
It's a negative statistic without.
Oh, boy.
I'm sorry. It's just it's unacceptable. Next.
All right, Ryanair. So trading over in Dublin, up 4%. It was down 22% year to date ahead of this news. So Ryanair CEO saying he has, quote, almost zero concerns about its jet fuel supplies this summer. And this is, of course, amid fears of widespread cancellations in the airline industry linked to the high fuel costs and the war with Iran. The CEO says uncertainty, though, is making travelers book later. He says that's actually keeping summer holiday fares down because the demand just isn't there. He said that Europe is now well stocked with fuel, and he says that's thanks to shipments from West Africa, Norway, and the Americas. Ryanair has hedged 80% of its jet fuel requirements out until April of next year at about $67 a barrel.
Nice.
But he said if this war continues and goes on for another year, let's say, and we have, oh my goodness, and you have oil prices continuing to stay high, he believes we're going to see some low-cost airlines in Europe go bust, sort of a la Spirit Airlines.
Okay,
Here.
well, that's good for Ryan.
Yeah, Ryanair. Yeah, I mentioned it's up 4%. It wasn't. It was lower earlier today, but then it did a little turnaround. Yep. All right, and then we've got Regeneron. So this is a biopharma company down 12%. It was already down 9.5% year to date. So its late-stage trial for the a skin cancer treatment missed its main goal. So the drug did not show a statistically significant improvement in progression-free survival. Basically, it means it didn't delay disease progression or death. And Wall Street answered back with a number of downgrades, also price targets being lowered today on the stock. And Regeneron had also already been going through it because this comes after another drug failed, tests last year. So investors are growing impatient with Regeneron.